Hey everyone, in this video we're going to discuss what market capitalization is. What is market cap? How do you calculate it? And why do investors care so much about it? If you want to learn more about investing in the stock market, make sure to subscribe to the channel and hit that like button. And without further ado, let's begin. The first thing we need to understand is what is market capitalization, or market cap for short. Market cap is simply the total value of a company's outstanding shares. In other words, it's the total value of a company. To calculate market cap, you multiply the current share price by the number of outstanding shares. It's that simple. For example, if a company's share price is $20 and there are 1 million shares outstanding, then the market capitalization would be $20 million. There are several ways to find a company's market cap. You can either get it directly from the company's website, look it up on a financial website, or use a stock market tracking app. Most stock trading platforms will also display the market cap of a company along with other important information such as the company's name, ticker symbol, and sector. When evaluating a company's market cap, it's important to keep in mind that not all companies are created equal. A company's market cap can tell you a lot about its size and value. Generally speaking, companies with a higher market cap are larger and more established than those with a lower market cap. However, this isn't always the case. Sometimes a company's market cap can be inflated or deflated depending on a variety of factors, including the company's industry, growth prospects, and overall economic conditions. That being said, there are some general guidelines that you can follow when evaluating a company's market cap. Small cap companies typically have a market cap of less than $2 billion. Mid-cap companies have a market cap between $2 billion and $10 billion, and large-cap companies have a market cap of more than $10 billion. Keep in mind that these are just rough guidelines, and there's no official definition of what constitutes a small, mid, or large-cap company. In addition to a company's market cap, it's also important to consider its price-to-earnings ratio, or PE ratio for short. The PE ratio is calculated by dividing the company's current share price by its earnings per share, or EPS. Ticker symbol is a way of measuring the company's stock price relative to its earnings. A high PE ratio could indicate that a company's stock is overvalued, while a low PE ratio could indicate that the stock is undervalued. When evaluating a company's market cap and PE ratio, it's important to keep in mind the company's industry. Different industries have different PE ratios. For example, the average PE ratio for the S&P 500 is around 20. However, the average PE ratio for technology companies is much higher, around 100. This is because investors are willing to pay a higher PE ratio for technology companies since the industry is growing so fast. So how do investors use market cap and PE ratio to make investment decisions? One way is by investing in index funds. An index fund is a type of mutual fund or ETF that tracks a specific market index, such as the S&P 500. Index funds are a great option for investors who do not want to actively manage their investments. By investing in an index fund, you're essentially investing in the entire market. Since index funds hold a wide variety of stocks, they're less risky than investing in individual stocks. Another way that investors use market cap and PE ratio to make investment decisions is by investing in exchange-traded funds, or ETFs for short. ETFs are similar to index funds in that they allow investors to buy a diversified portfolio of stocks at once. However, ETFs are traded on stock markets just like individual stocks. This means that an ETF's share price will fluctuate throughout the day, whereas an index fund's share price will only be updated once per day. No matter how you choose to invest, it's important to do your research and understand the risks involved. Don't just invest in something because it has a high market cap or low PE ratio. Be sure to consider the company's industry, growth prospects, and overall financial health. Hopefully this video has helped you learn more about what market capitalization is and how to calculate it. Remember, market cap is simply the total value of a company's outstanding shares. It's important to keep in mind that not all companies are created equal, and a company's market cap can tell you a lot about its size and value. When evaluating a company's market cap, it's also important to consider its price-to-earnings ratio. By using market cap and PE ratio, investors can make informed decisions about which companies to invest in. Thanks for watching, and be sure to subscribe to the channel and hit that like button if you want to learn more about investing in the stock market. Until next time.